putting this Lyft IPO in the context of the broader markets, right now, major indices are all up. Lyft is down. How much of an impact do you expect these IPOs to have on the market as the year continues? Because there's just a ton coming to market.
Right. Well, I think it's a reflection of where we are in the economic cycle and the stock market cycle that you do tend to have IPOs coming out at this point. You have a lot of M&A activity, et cetera. But I think it's going to be more of a headline event than a bottom line event. I think really the focus is more on Q1 earnings, which right now are expected to be off 2.7% year on year, which is half of an earnings recession. And then the guidance as to what's going to happen in the second quarter. Right now, we're expecting only the S&P to eke out a 0.7% advance. So in a sense, we're on the precipice of an earnings recession, possibly.
Bob, all kinds of data this morning. Yeah. Some negative retail data for February, though a bit more positive for January. The Chinese manufacturing data, though, positive. How much of that's playing into what we're seeing the indices overall do?
Oh, it's the main reason we've got the global markets up. China, that number was really important over. Remember, that we've been a slow slide down in the Chinese economic data for 6 months now. They are furiously stimulating their economy. I think that's the main reason that we're up so much today. The European economic numbers weren't so great. While our retail sales number was not great, remember the January revision was notably to the upside. And you can now argue that maybe we're messing up somehow. And obviously you can drive a truck through these numbers. Sam knows this. You know the 90% confidence interval in these economic numbers. They're terrible. So the revisions of these are huge on a monthly basis. So I'm reasonably optimistic the retail sales numbers will also be revised upward again in February as well. I'm more concerned about the whole Lyft situation because the whole sentiment for the market right now, part of it is based on the idea that all of these tech unicorns are going to come at very, very high valuations. And Lyft is very effectively challenging that right now. We were concerned about this. We sat on this panel, the four of us, just last week, and I said, excuse me, $15 billion in the last valuation for Lyft, and they want to come at $23 billion? Investors are not fools. And they saw that. We saw what happened here. Anyway. Well, I think that's a concern. Now, what I think is a reasonable question now is does this mean that other IPOs are going to have trouble? It certainly means they're going to be cautious on the pricing, and that's good news for the people who want to buy down the road.
Although, I mean, we can have IPOs underperform, but if China takes off again, that's going to make this seem like a second story.
Absolutely, yeah. Yes. Because right now, the feeling is that we're heading, in my opinion, more toward a soft landing than we are a recession. I published my Yield Conundrum article this morning that said of the last 7 times that we've had a flat or an inverted yield curve, we ended up with the Fed cutting rates 7 of 7 times, but only 4 economic recessions. So, we can worry about a recession, but actually most times we don't have to worry too much.
Do you think the Fed could cut rates this year?
I think it's certainly a possibility. I mean, take a look at what happened in 1995, which was one of those years in which we had a flat yield curve. 0.28 was the spread between the 10 and 2-year. And then by July of that year, after having ended their rate tightening in early February, July, they started cutting. So there's a possibility that could be this year as well.
Remember, any kind of bottoming in China is going to help us out because that will ripple through Asia. We get probably 20% S&P 500 earnings now in Asia, 20% in Europe now. If that can stabilize, we're not going to have an earnings recession. If we go into a recession in 2020, would you agree, Sam? Then we're going to have earnings down 20%. Then we'll see the market drop 20%. But if you can avoid that, if you can stabilize in China and Europe, we may not even have 2 consecutive quarters of downward earnings growth.
I think the reason that we ended up beginning the year at 6.5% growth expectations, now at only 2.2, is because of the downward revisions, because of the trade dispute. If we find that the trade gets resolved, then we probably are likely to see the full year numbers come back up again.
But your year-end target's not that aggressive, right? 20s, where are you?
29.75. Actually, give me a couple of weeks ago, it sounded overly aggressive. But yeah, I guess it depends on what week we're in.
We're wondering how to read 2 things out of China. One, this manufacturing data, which is positive. The other interesting headline from us, actually, CNBC, Apple dropping prices on the iPhone 6% in China, perhaps suggesting that they're not entirely stabilized and out of the woods yet when it comes to that. Should investors read into that, at least at a certain segment of the market in China?
Possibly, but also maybe that the most recent iPhone is just expensive to begin with, and then maybe people in the U.S., myself included, sort of question, gee, do I really want to spend that much for an iPhone? Maybe I'll upgrade my current 5 to a 6. Who knows?
Yeah, and it's even more expensive in China. Bob Pisani, Sam Stovall, thanks for being with us.
Well, still to come on Squawk Alley, more distractions for Jeff Bezos, why his private security advisor is saying the Saudis hacked the Amazon chief's phone. But first, Rick Santelli, what are you watching today?
Anybody looking at yields this morning, they're definitely distancing themselves off of last week's intraday bottoms of the most recent move. That's what we're going to discuss after the break.
I'm Scott Wapner. Here's what's coming up on the Halftime Report at the top of the hour. We reveal our exclusive halftime stock survey to find out where Wall Street says stocks are going. We'll debate it with Schwab's Liz Ann Saunders. Plus, the Fed under fire. The president, the economic advisor, the nominee, all arguing for urgent rate cuts. Is Leisman against Livornia? They square off on what the Fed should really do next. And is now the right time to buy Lyft shares? They're sagging today, now below the IPO price. We'll tell you what our desk is doing when we join you at noon. John, we're about 20 away. We'll see you then.
All right, Scott, thanks. Now let's get to the CME. Rick Santelli's got the Santelli Exchange. Rick.
Good morning, John. Well, maybe Lyft needs a little more lift, but treasuries are getting a lift. As a matter of fact, if you look across the curve, 2s, 3s, 5s, 7s, 10s, 30s, they're all rising. Now, that shouldn't be shocking, but we need to discuss why and what are the possibilities from here. First of all, we all know that it seems as though we have relinked the correlations and the influences of rising rates and rising stocks and maybe a firming economy, firming in the context that there was definitely some give back between the transition of 2018 and 2019 globally and domestically. But as we see moving along, whether in China or whether in the U.S., retail sales aside, numbers continue to seem to be firming. We're will we go next? I always like to go to the whiteboard. So here's a chart of 10-year note yields starting in September last year, because that's really all we need. We have everything here we need to work with except for one thing, that if we went back in time to the fall of 2017, we'd find a whole lot of congestion in the 235 to 239 area. Now, remember what held. What was this closing low bottom last week? It was 237. We've had a couple of Santelli exchanges where we've gone back and showed where that level came from. But we have our double tops at just shy of 3.25. We have what I consider is the second most important area on the chart. That's January 3rd. That bottom was right around 255. And what happened over time is, once we started to get close, the minute we closed below it, we really accelerated, which one would think it also gives high credibility to how important that point is. So the bottom, it was hard to gauge. Even though these were important areas, sometimes whether it's trend lines, wave formations, you let the market tell you. And we could definitely tell Friday and today that we now have enough cushion to make this decision. So only a couple of three things can happen. We either retest this line and we come back down, in which case many will be figuring a certain amount of basis points to look for rates to go back down. Number two, we just go straight through. Obviously, the most aggressive. If the day you penetrate, you also close above it. That gives you a much higher factor of bullishness. And finally, the third thing is that you never even get close to that line. And let's say we bounce around a little bit, but we fail. That would be a big deal, because once you take that out on a failure to get above that line, most technicians would say they're really going to be looking for a big move rates lower. So at least at this point, 255, 256. That's the area to pay attention to. Morgan, back to you.
Rick Santelli, thank you. Jeff Bezos' private security advisor Gavin de Becker publishing an op-ed accusing the Saudis of hacking the Amazon chief's phone. Robert Frank has more on those claims and more distractions for Jeff Bezos. Hey, Robert.
Good morning, Morgan. Will Gavin de Becker, who has been Bezos' security chief for 22 years, say Saudi Arabia hacked the phone and the private data of the richest man in the world and helped expose his affair to the world. Now, de Becker writing in the Daily Beast Saturday that his internal investigation found with high confidence that the Saudis had access to Bezos' phone and gained private information. Now, he said the Saudis were intent on harming Bezos because of the post-coverage of the murder of journalist Jamal Khashoggi. Now, it was the Saudis, he said, who provided the original tip to the National Enquirer last year that led to its expose on the Bezos affair with Lauren Sanchez. Now, de Becker's claims lacked any direct evidence, saying only that the Saudis had the technology to collect smartphone data in the air without leaving a trace. And de Becker himself confirmed reports that Lauren Sanchez's brother, Michael, was the paid source for the Enquirer's story. Now, AMI, the parent company of the National Enquirer, for the first time outing Michael as the only source for that story, saying in a statement on Saturday that de Becker's claims are, quote, false and unsubstantiated, and that it was Michael Sanchez who tipped the National Enquirer off to the affair on September 10th of last year and provided all of the materials for our investigation. Guys, back to you.
Robert Frank, thank you.
Thanks.
And up next, Lyft investor and Grammy Award-winning rapper Chamillionaire joins us. Why he invested in the company, and if the stocks drop today, has him worried at all. We are back in just a minute.
You may know him best for his Grammy Award-winning hit Ridin' that topped the charts in '05, but he's also made some savvy tech investments over the years, including Maker Studios, which was later acquired by Disney, Cruise, later acquired by GM, Amazon's Ring, and now Lyft. Joining us to talk about his investments, including Lyft Grammy Award-winning rapper Hakeem Chamillionaire Seriki. Cam, appreciate the time very much today. Good to see you.
Thank you for having me.
It's clear you know your way around an early stage investment. How do you do this? Who advises you, and what kinds of things are you looking for?
A lot of it is just intuition. I started a while back, had a lot of interest in getting into the tech space and did a lot of research and was able to find a lot of companies and just kind of found my way. So nobody's really advising me, really.
Oh, wow. You have a knack for finding things that later get bought, or in this case, in the case of Lyft, go public. How early did you get in on Lyft, and what do you make of both the first day of trading Friday, pretty good day, and then today trading below that IPO price?
Well, Lyft was, I guess, me and a few others, Big Boy from Outkast, Trey Songz, we were excited about investing in something in the ride-sharing space. And it was around 2014, we started getting really excited about it, and we started making the steps to try to get in touch with Lyft. And I think we actually made the investment around 2015. And I had previously done Cruise, which is a autonomous vehicle software company, and was excited about self-driving cars. There was Uber, there was Lyft, and we went and spoke to the founders, and they let us in, luckily.
Cam, are you staying invested in Lyft, or are you exiting?
Excuse me?
Are you going to stay invested in Lyft now that it's public, or will you take that money and put it to work somewhere else?
I'm definitely bullish on the company. I'm in it for the long run. The founders are just special people, and I feel like the management team is great. I feel like there's a lot of potential in the company and the future of what it could do. And I'm definitely bullish on it, so I'm going to keep some of my stock.
Cam, you said, I believe, that you met a partner at Upfront Ventures 10 years ago. You've been in this game for a long time. You also said that you wanted to make more money in investing than you did in music. Have you reached that point yet? And can you share some of the things that you've learned, kind of your pro tips on investing in startups?
Actually, my focus is not necessarily about money as much as people think. There's a lot of miscommunication out there, and people often post articles that I'm trying to be a billionaire. That's not actually the case. I believe that this industry has a lot of, just value in it, and this value hasn't been given to my community. So what I'm trying to do is learn as much as I can, make a lot of investments so I can plant some seeds to help my family, but then also bring a lot of other people in. That's really why I'm here. I feel like a lot of these companies are disrupting the world. There's self-driving cars, there's electric buses, there's wireless charging, and so much innovation that's happening here, and people from my world generally don't have access to this stuff. And I just felt like I started on this journey a long time ago. Curiosity brought me here. I was an EIR at Upfront Ventures in LA, which is one of the largest early stage VC funds, and I saw a lot of companies coming in and raising capital, and it just made me want to dive deeper into this world. And now my mission is to try to help a lot more people that look like me get into some of these companies. The companies are acquiring and liquidity events are happening, and there's a lot of non-accrediteds in the world that don't have access to these companies, and I feel like it's almost unfair. So now I get over here and I start to see deal flow that, luckily the celebrity part of me allows me to get in places that other people can't get to, and luckily that's resulted in quite a few exits.
Yeah, that's extremely cool. I love on your Twitter bio, you say platinum and Grammy Award winning recording artist, but then you follow up quickly by saying startup angel investor, knowledge seeker, and boss. Are there investments that you wish you had made and just couldn't get to in time?
Oh man, I see it all the time, but that's part of the game when it comes to investment. You got to be okay with missing out on some things. There's plenty of VCs and angel investors out there that can tell you stories about deals that they missed out on, but you know what? I'm a founder first person. I focus on investing in companies that I believe that have founders that have the domain expertise and the hunger and the skills to be able to take a company to the next level. That's kind of what made me excited about Lyft, because I went and spoke to the founders and they just seem to care a lot more than most people. There was a time when Hurricane Harvey happened in Houston, and Lyft reached out to me and asked me about how could they help. So what we came up with is I would go give $1,000 worth of Lyft credits to any family that needed it. So I was in the water seeing all these families that got impacted by Hurricane Harvey. And then I reached out to Lyft, and Lyft let me put $1,000 worth of credits on every person. And when I thought it was going to be too many, then they were like, nah, keep going. And I just kept out giving out a whole bunch of credits to a lot of families. And that's just like something special you don't see in companies, you know?
Yeah. The founder dynamic is something that's been talked a lot about regarding Lyft, but obviously that would not apply to Uber. Does that make you less interested in them?
I don't know. I just felt like at first I was super bullish and excited about Uber too, but you know, when we made the investment in Lyft, I feel like we made the right choice because the founders, they're just, and the management team, you know, in general is just, you know, they're not as plagued with as much of the negative publicity and, you know, all that stuff that I saw happening. They're focused on taking a lot of the market and not trying to be distracted and you know, it just shows. And I feel like we made the right bet, you know. I know there's a lot of people that are excited about the upcoming, you know, Uber IPO, but me personally, like, I'm long and bullish on Lyft.
I gotta get your thoughts on this brewing debate around more regulation in the tech space. I know you developed and launched this app, Convos, which is essentially a social media platform. When Mark Zuckerberg comes out and says the internet needs new rules, let's start in these 4 areas, you think what? What do you think about what he's doing at Facebook? And I guess, what do you think about data and this debate around how it should be guarded or regulated?
I agree with Mark that there definitely should be some regulation, but a lot of times I don't feel like government is best equipped to decide regulation because I feel like a lot of times they're still learning about tech and how it works, you know. I watch the Senate hearings and stuff like that sometimes, and I'm just seeing the questions they ask sometimes. It feels like they need sometimes to get up to speed on the way tech works so we can really find out the best way to regulate these companies. I do think that, you know, privacy is super important. You know, Mark has a responsibility when it comes to Facebook and the things that they do, and he's kind of setting the bar for what happens with a lot of companies that come behind him. But I definitely do feel like there needs to be some kind of regulation on some of these companies.
I gotta get your thoughts on the state of the music industry. Streaming services, the fact that music revenue does seem to be growing again, though it's still only a fraction of what it was a decade or 2 decades ago. Do you think we're sort of, that the industry has basically developed a new model that'll now be sustainable?
Man, it's tough when I think about the music industry because I was there during the golden age and saw a lot of the money that was being made from traditional record sales, and now it switched to touring, and then a lot of companies came, tech companies that cannibalized our industry. The unfortunate part is I start to see cap tables of companies that had executives from the music industry participating on the cap, on, you know, ownership in the companies. And a lot of times the artists don't have that same luxury. They're still chasing touring revenue and, you know, trying to get their streams up. But sometimes the companies that are facilitating the streams are owned or, you know, executives have a piece of those companies. And I decided I want to be more on that side of the fence. And, you know, hopefully I can start to encourage a lot of other artists to understand the value of ownership and equity and you know, so we can create an even bigger business model for our families, you know.